So if you worry this thing doesn't get extended, you can identify the companies that would most likely be hurt by a new rate. What we did is we looked at the companies that benefited the most from the lower of the tax rate eight years ago. So who was like the difference between the reported tax rate and the statutory rate, right? So companies were supposed to pay 35%, but a lot more were paying 19 or 10 because they had Israel or Ireland or Singapore or some offset, right? And so when they lowered the rate, a lot of companies that had low rates already, there wasn't that big of a difference, but those that had high rates, there was a big difference. So if you're worried about it not being extended, a lot of them are U.S. consumer companies or they have no non-U.S. revenue. They really benefited. So if you worry this thing doesn't get extended, you can identify the companies that would most likely be hurt by a new rate.